Hello financial investors and welcome to the channel. Today we're going to be doing our stock market weekly recap for the 6th through the 10th July 2020. We're going to go ahead and kick it off by taking a look at last week's changes for the last week, which was positive last week. Going into this week, I said why bet against the Fed? We're going to have another positive week, and guess what? We did. So we're going to go ahead and cover the changes there for the week. Then we're going to go ahead and take a look at the entire S&P 500 performance, what stocks were up, what stocks were down. I believe we can also take a look at the NASDAQ this week. I'm going to try and see if we can add that in there, and also take a look at the individual holdings within there, because that NASDAQ has been hitting some new all-time highs and is up over 4% this week alone. So it is crazy. Also from then, we're going to go ahead and check out the dollar, silver, gold, bonds, and wrapping it up by taking a look at the mortgage rates, whether it's positive or negative. I haven't taken a look at it yet. So I like to do these weekly recaps to kind of keep track of what exactly is taking place here in the market, which we did have job numbers come out, about 1 million and a little bit extra of unemployment recorded. And overall, the economy is slowly beginning to reopen, but there are still other locations here throughout the United States that is having increased, not increased numbers of, what is it called, testing is going on. And I know here where I'm located in Oregon, we've had a continuous spike, not by much, but maybe 4 to 10 per day. And one of the areas that I'm a part of was actually recently hit, and now we're being told to work from home. So starting on Monday, I will be working from home. But anyways, beyond that, let's go ahead and get into the video. If you are brand new to my channel, would really appreciate if you subscribe. If you have any comments or suggestions, leave them down below. Let me know what stocks you're planning to buy this upcoming week. What do you think the market's going to do? And of course, give this video a thumbs up. Let's go ahead and get into the video. So last week, again, pretty positive last week. The FANG stocks out there. Facebook and Apple pretty much kind of flat on the week, but carried by Amazon, Google, Microsoft, Nvidia, and also Netflix should be around here somewhere in the zone. But overall, pretty positive week. The really only sector that got hit hard was the banks. If you take a look at JP Morgan, Bank of America, Wells Fargo, Citibank, there was some stress testing going on last week, and most of the banks passed and didn't have to cut their dividends, whereas Wells Fargo, it failed and will have to cut their dividend by a bit there. So I did see a few investors' portfolio being affected by this. I know Matt Money, his channel, he has a pretty large portfolio invested in the stock market, with Wells Fargo being a nice chunk of his financials. So be interesting to take a look at of these financials in the future. I do believe everybody should have a few financials in their portfolio. I have JP Morgan and I believe a couple others, but let's go ahead and get into our video. So S&P 500 this week put on nearly 2%. It is up 1.76%, just shy of being positive year to date. I believe next week we may start to see a little bit of weakness now with 2 weeks of positivity. And we've been slowly reopening, but I do see small mid-cap companies beginning to get hit slowly. Again, in my own job, we're beginning to work from home again. We're closing down locations just because they've been hit here recently with outbreaks. So we're trying to control, and there's other counties northern of us that are having 40 cases, 50 cases a day. So we are trying to limit the exposure of not only ourselves internally, but also the members that go in for services at our branches. So S&P 500 here this week up 1.76%. The Dow Jones this week up 0.96. So a bit of a disconnect there, nearly almost 0.76%, almost, if we were to round up, let's say 2%, we're almost a little bit, a 0.75% below, underperforming the S&P 500 with the Dow Jones. And I don't know if it was Boeing this past week. I know Boeing has been kind of trending lower. I know for a while it had trended up nicely, but then has begun to kind of step back a bit. NASDAQ this week, as we were discussing earlier, I'm going to see if we can pull this one up in our Finviz to take a look at the individual holdings within there, take a look at which ones are carrying this week after week, nearly up 4%. This one quadrupled the Dow Jones and doubled the S&P 500. So really nice performance here throughout the week, starting off up 2.21% on Monday and just continuing to move higher day after day, breaking all-time highs here. Essentially almost at close. We hit the high here, 10,622. It wasn't not long ago that the Nasdaq was on the news for breaking 10,000, and here the Nasdaq is about to break 11,000 points. So, really crazy right there. This one is up 18.33%. Reminds me of the tech bubble back in 2000. The Russell 2000. Here's what I'm kind of discussing here. These small, mid-sized companies that have reopened, but their employees don't want to come back to work. They're getting unemployment. They're getting that $600 check on top of it. Plus, they're going to potentially expand on that. So maybe not $600, but they're going to have $400 during this downturn. So why bother going back to work if you're getting offered a job, but somebody else is paying you your job's income, salary, plus that additional $600? Why would you go back to that? So a lot of these small mid-cap businesses are not able to hire people, or they've reopened, maybe not seeing that traffic they were hoping to have, or they're having outbreaks and being affected by the current situation, and they're having to reclose their shops. Such as I've seen that quite a bit here locally where I'm at, and my city is not too large. I live in southern Oregon, so it's not a very large metro area such as Portland and all those areas up north. So we're still being a bit affected there. So I do believe the Russell 2000 is going to be a little bit of a chink in the armor, and then we might see a fall with the rest of the market following that Russell 2000 in the future. Now, I don't believe the futures are going to be playing too much of a part right now. This is something I will wait as we get closer to Monday opening, where we'll see the S&P, Nasdaq, the Dow Jones performance. So, yeah, interesting headlines here. Goldman Sachs is super bullish on Netflix, as they should be. Netflix has been doing amazing. Now, taking a look right here, this is the S&P 500 heat map. If you go to finviz.com on the right side of the page, you're able to click and see how the stocks have performed here. Now, we're looking at a weekly change. So right off the bat, which stocks are the brightest here? And that would be FAANG. Facebook, up nearly 5% this week. Apple, 5.38%. Amazon, 10.72. Look at that. Amazon closed at $3,200. I bought Amazon back in 2013, 2015 for maybe it was 2015. I bought it at $400, and at that time I thought it was expensive. And when Amazon ran up to, I believe it was maybe $800, $900, I felt amazing. I had made over, I 2x my equity within that portfolio. I only had about $10,000 or so in that, so I turned it into $20,000. I thought it was really great, and I sold out of it because it had peaked out, I believed. Well, here we are, several years later. It has quadrupled since that $800 mark that I sold at. Apple, kind of the same picture. I had a good amount within Apple, but I did sell it, and I moved into Avi. Avi has done really well as well, but nowhere near as well as Apple has in that same time frame. Now, if we take a look at the other companies here, we have Netflix up 15.06%, Nvidia up 9.02%, Google up 4.7%. We also have the Microsoft up 3.59%. So those FAANG stocks are doing extremely well, and they are carrying this market. You can see the rest of the market here. All the other little sectors here. Healthcare, primarily negative. Industrials, negative. Real estate, negative. Healthcare, aerospace, financials. There's a lot of red out there within these different sectors, but guess what's holding the S&P 500 up? It's these tech stocks. That is why the Nasdaq was so high this week, is that all these tech stocks are just pushing it higher and higher. So it doesn't look like I can actually go and take a look at the Nasdaq here. If I look at the full let's take a look at what holdings are within the full. So there's a lot here. That's why I like to look at just the S&P 500, because it shows us the top 512 companies within there. I do see Berkshire Hathaway having that deal for them where they bought part of Dominion Energy, ticker symbol D. Worked out really nicely for them. Really nice cash flow. So kind of an interesting week there within the S&P 500 and the market overall. Now, the dollar this week is continuing to move lower. We've seen the dollar getting weaker and weaker week after week here. We started at 97.19. It is now at 96.16. So essentially almost 50 cents there on the US dollar index. Both silver and gold broke to almost new highs here. Silver during the week broke to a high of 18.35 here on open on Thursday, before kind of coming down here a bit on Thursday and ending it at 4.43% here on the 5-day change. So, with gold hitting that all-time high here recently of 108, I believe it was 1,800 or so for the total, but you divide that by 10 and you're going to get the gold shares here, ticker symbol GLT. This is essentially hitting these all-time highs here. On Wednesday, Thursday, we could see here that it hit an all-time high of 52-week high, not all-time, but we'll say 52-week high of $170.86. This is extremely high here year to date with gold shares. I don't know how long the run will last with both silver and gold. The bonds essentially flat on the week, 0.23%. Not too bad there if you're looking for a safety net. Bonds are definitely still pretty safe there. Now here, 10-year is at 0.63. Last week, we saw that the 10-year was at 0.67. So we did see a decrease there of negative 0.04% with the 10-year rate. And mortgage rates here has rose by 1 basis point. So essentially, it was at 3.35 last week. We are now at 3.36. If you are able to refinance, if you're able to go get a home, you'll essentially get quoted between 2.75 to essentially 3% if you're buying for your primary home. If you're buying for a investment home, you might get quoted between 3 to 4%, maybe even 5%. Just kind of shop around there if you're interested in looking for a home. Now, I did release 2 videos this week. I released my Monday video kind of going into 2 companies I was purchasing, which are AT&T and Pfizer. Both of those did really well this week. And I've seen a lot of investors, not only on Facebook, but also in the other Facebook groups, dividend stocks and growth stocks. They're buying into these high valuation companies, or they're currently chasing yields. They're buying companies that are underperforming the market. And I've done this in the past where I bought companies that were dipping, but there's a reason that they're dipping. I know I didn't go out there and buy Simon Property Group or Las Vegas Sands, or there's a couple other companies out there that have dipped. I realize that they dipped for a specific reason. There's a reason that they dip. There's a reason they cut their dividend. We don't know how long they're going to be in the state that they're currently in, and when they will begin to reopen and drive business back through them. So a lot of these companies are getting bought up that have high yields of 8-10%, and then they continue to fall just because in this current environment they're not able to turn any profits. So I would be very careful looking and investing in companies that cannot go through this downturn here in the long term, say another year or so. We're thinking of having individuals work from home for potentially the rest of 2020. So, who knows how long it'll kind of go on. Here we are in July, the 7th month of the year. We have another 5 months in 2020. So it could be quite a while. I'd like to hear from you guys. Are you guys working from home at all? I thought this was really interesting. I'd like to do the $4. Yeah, I'd like to do the $4 work week where I get paid $1 every day. No, absolutely not. This is the 4-day work week where we get a 3-day, I like that. I did that while I was in the military. I worked from 6 in the morning till 6 at night, or 6 at night till 6 in the morning. So I had a 12-hour shift, and I'd work 4 days on, and then I'd have a 3-day weekend, which is really, really nice. I could plan vacations. I have a station overseas, so I got to fly around quite a bit and do a lot of travel. So I think having that 3 days, one to kind of relax or get to your business, and then enjoy those 2 additional days, and then get back to work on that 4th day. So kind of a nice there. And I did have one company here. I used to be invested over at Motive Investing between 2013 2017 or so. I believe it was the time frame of my Motive Investing. Prior to that was with Vanguard. But Motive Investing recently closed their doors. They're shutting down, or they have shut down. And I got $1. So I had no idea I had cash over there. I had sold everything in the account and transferred over to Robinhood, I believe, from Motive Investing. And here I got $1 sent to me on a check. This is the biggest check I've ever received. No, but it's really interesting. The whole I really liked Motive Investing. They were one of the first ones out there that really offered fractional shares prior to M1 Finance, prior to really anyone out there. Motive Investing was out there offering partial shares since maybe 2013, 2014, and they were a pretty interesting platform to be on because you could take your $10,000 and buy whatever you wanted. So they were the original M1 Finance, but then M1 Finance came out and they completely dominated that fractional share market, and it took quite a while. But now Robinhood and Fidelity, I believe Charles Schwab is also moving towards that way. I would really like to see Merrill Edge go that way as well, but we'll see. So M1 Finance here, we did have a bit of a mixed day. When I checked my portfolio in the morning, it was up nearly 2%, and here at the very end of the day, it was up 1.68%, and that was, a little bit has to do with Waco Group and a few other positions, but we can see overall pretty nice week there within the markets. Ending the markets pretty much green there on the week. So I believe that is all I shared. I shared one more thing. So, a big discussion that I've seen other YouTubers is that the potential banning of TikTok. I know Joseph Carlson has also recently discussed the TikTok platform, but I'm more focused on just Chinese apps. Now, of Chinese apps, I realize that Weibo is a app that is actually owned by a Chinese company. And if they do decide to ban all these Chinese apps, China already bans Google, YouTube, and other social media platforms, Facebook, for example. And so if we go ahead and begin doing that, I know Meet Kevin, he uses Weibo. Graham, I don't know if he uses it, but he promotes it. So there's a lot of individuals out there who have signed up for this platform, who are doing their investing on this platform. I have stocks over on Weibo as well. So this could be a good time to, sign up for Weibo if you haven't done so. I have a link down in the description below. Get your 2 free stocks, but also maybe start looking at other brokers, maybe looking at Robinhood again, or taking a look at Fidelity, Merrill Edge, other platforms out there that are available. Because if this goes through sometimes here in 2020, maybe 2021, you're going to get locked out of your account, being unable to access your funds. So I don't think that would be nice for anyone. So I thought that would just be something to share there. So let me know what you guys are up to this upcoming week. Do you believe the stock market would be positive or negative? Honestly, I think this week we should have a bit of a pullback. We can see here the NASDAQ is up 18.33% already this year. So it is hitting some all-time highs right here. This is an all-time high. So it's crazy to see just how high this has climbed within out of this March fall. So that is it. Let me know in the comment section below what you're planning to buy. What do you think of this market? What are you currently doing with your cash? I'd like to know down in the comment section below. And that is it. Subscribe to the channel if you haven't subscribed. If you do enjoy this video, find it helpful, definitely give this video a thumbs up. And I will see you guys in the next video. Bye.